Hey guys, welcome back to my channel. Today we're going to be talking about the 5 top mistakes that people make, new traders as well as some experienced traders as well. I have made them all, so I kind of know what I'm talking about after being trading and investing for 12 years. I started when I was 18, I'm 30 years old now. I know that it doesn't look like it because I exercise daily. No, I'm joking. I'm just very blessed, I guess. Thank you, mom and dad. But yeah, without further ado, let's just get right into it. Okay, first mistake is investing for the short term, or what they say it's called day trading and all of that. Can I just say shit? Yeah, it is shit, it is garbage, whatever you want to call it. Basically, when you invest with a very short-term horizon, you're prompted to make some very silly mistakes. You use leverage to double down on your positions. You have very tight stop losses, and in these volatile markets, 9 times out of 10 your stop loss is hit, and your position is liquidated, and you have to close maybe a winning position or something that you would have believed in into the long term, right? And also, if you want to compete with the hedge funds, you think you have an edge just reading charts, millisecond charts. I do believe that long-term charts are good. RSI, long-term RSI, Bollinger Bands and all of that jazz. Long-term charts, I like them, I use them and everything, but short-term charts, maybe 4-hour candlesticks and all of the jazz, I think it's like reading tea leaves. It's just flipping a coin. Also because there is trading algorithms that are doing that 100,000 times better than the average Joe. So I wouldn't really get into this space if I were a new trader. Alright, second mistake, which kind of relates to the first one, is investing for the short term as opposed to the long term and using money that you need to use for other purposes in life. Like, say for example that you're going to uni and you just have a little bit of spare cash, but then in a few months you know that you will have to pay bills for university, right? The tuition or whatever it's called. I don't know, I graduated a long time ago. And this is going to prompt you to make questionable decisions when it comes to investing. Because when I personally invest in a stock, asset or whatever, I have a very long-term horizon. And as Warren Buffett says, my preferred holding period is forever. So I'm kind of the same. I really like to buy stocks that I believe that are undervalued now and that will perform very well in 5 years. Or I'm also very keen to buy growth stocks such as Apple, Facebook, Amazon, all of those growth stocks, because I see the potential and what they can achieve in the next 2, 3, 4, 5 years, right? I really think that this has helped me so much in the past 12 years to make the best decisions that I've ever made in terms of investing. And I'm still doing the same, and I will never change. Another mistake is to use leverage. I know that it kind of relates to the mistake number 1, but I'm just gonna gloss over this one. Leverage, guys, for those of you that don't know this, but leverage is when you basically borrow money from the broker, bank, broker, eToro, whatever that is, and you use that money in order to open a larger position that is long, so you hope that the price goes up, or is short, so you hope that the price goes down. It is absolutely mental. If you trade, and some people used to use leverage with crypto, but crypto is already leveraged by itself and you don't have to pay daily fees, which leads me to mistake number 4, fees. So fees is honestly crippling your investment, because again, you should be and not financial advice, but you should be, or at least in my personal opinion, you should be focused on the long term. If I were to pay daily fees on my assets that I'm holding for the long term, oh boy, I wouldn't sleep easy, right? I wouldn't sleep like a baby as I do now, because I would know that the longer I keep these positions open, the more fees I pay. What I do instead is investing in stocks, or maybe even the S&P 500 and all of that jazz. You can invest in stocks that you don't have to pay fees for, you don't use leverage, you don't do any of that jazz, and if anything, they will give you dividends. Now, dividends this year, past year, are not amazing, to be completely honest with you, but that's fine. As long as they're not paying fees, just enjoy the ride, because we're in the bull market now. And the real issue will come with the bear market will come, which I expect it to be in 2023 when the Fed will raise interest rates. Yeah, we see maybe second half of mid-2022, 2022, yeah, and 2023. But irrespective, let's just park this for now. Mistake number 5. Do not panic sell, do not FOMO into this stuff. And I know we are all humans, or human, I don't know, English is hard, but we're all human, right? So, and it's quite hard not to FOMO into GameStop, AMC. Oh boy, you're talking to someone that does this, right? Meaning me. Now, I don't do this anymore, but I've been very tempted, but I've never panic sold. No, never. And I actually don't really feel that much. I'm completely detached from market fluctuations. It goes up and down. It doesn't really matter as long as you have a clear strategy. A clear strategy to get out, and a clear strategy to get out when it goes up, and a clear strategy to get out when it goes down. And I've talked about this in one of my previous videos where I was just saying exit strategy, mindset, and all of that jazz. Alright guys, this is all. It's very quick. Maybe you should have double clicked, as we say in consulting, double clicked onto some of these items. If you think that some of these are of your interest, just do let me know, and I'll double click on it and I'll show you real examples as well. Alright guys, until next time.